for Wall Street Media, this is Marley. I'm here with Doug, and we'll help you make money in the stock market with information you can't get anywhere else.
Hey, exclusive stuff, Marley. Where you
I
at?
have exclusive videos for you from Baird.
How about that? What do you
I
have?
have Dean Scarborough. He's the president and CEO of Avery Dennison. Their ticker's AVY. Talks about what they plan to do with their cash going forward and key priorities they plan to look at for 2008. Here it is.
Now, what are we going to do with that cash flow? Well, other than paying down some debt, we do need to delever after the Paxar acquisition. Our current debt to total capital is around 52%. We'd like to be in the 40 to 45% range. We're also very proud of our 32 consecutive years of dividend increase, so I'm expecting that the board will continue that record, and that's a very important area for us. So just to quickly wrap up, for Avery Dennison, there really are some key priorities this year. Number one is to capture the Paxar integration synergies, and then even in a time of economic slowdown, continuing to invest in those areas that we believe will deliver significant growth opportunities for retail information services on a go-forward basis. We're going to change the trajectory of the pressure-sensitive materials business. We've got great growth that's continuing on in emerging markets. We don't see that being affected at all in the current economic environment. We're going to continue to invest in new application growth, so especially in food and beverage where pressure sensitive is relatively underpenetrated. We have a few more years of accelerated productivity improvement where we're shutting down older, narrower, slower assets and debottlenecking larger assets so we can take cost out, and we're increasing prices to offset raw material inflation. We'll continue to manage our office products business for margin and cash flow, and then again we have a company-wide effort on Enterprise Lean Sigma that's really focused on improving service, enhancing quality, and driving productivity at the same time. And so if we do all those top four things well, we'll definitely be able to deliver on our commitment to increase free cash flow over the next few years.
I listened to this next one. It was amazing. They had 46,000 products, and I think he said no customer is bigger than 2% of the business.
Yeah, no, he's really interesting.
And no product is bigger than 1%? Mm-hmm. Pretty good stuff, Marley.
Here it is for you guys. It's Jay Nagarkati. He's the CEO of Sigma Aldrich. Their ticker's SIAL. Discusses the challenges for 2008 in terms of big pharmaceuticals focused on driving drugs to market, U.S. academic funding less than robust growth, and the impact of the economic slowdown on SAFC growth. Here it is.
Tremendous opportunities, and there are some challenges also that we see going into this year. For example, we all know that Big Pharma is focused on trying to push product through their pipeline to replace those products that are going to come off or soon going to come off of patent. So I think their focus would be to get the products through the pipeline, which means that they'll be increasingly outsourcing the front-end work to contract research organizations. Our presence, global presence, enables us to service their partners probably more effectively than others, and thereby taking market share, and it's very reflective in the way in which we have grown our Kepler sales. Second, U.S. academic funding continues to be less than robust. Now, conventional thinking obviously is that following the elections, there may be increased funding, which should be good, especially for us to continue to grow sales in the USA at a faster pace than what we have seen in the last couple of years. The impact of economic slowdown, though not evident at this point to Sigma Aldrich or our SAFC business yet, we certainly don't know what the future could hold, and if there is an impact, it would be first noticeable in our SAFC segment, which accounts for about 30% of our overall revenues. So having said all of that, there are significant opportunities for us to capitalize on, leveraging our core competency and capability. We have expanded our sales effort. We have continued to add sales specialists who are engaged in white coat selling, working side by side with our customers on new and emerging technologies, working with them to teach them how our products can work and enable them to achieve success in their projects. There is continued growth in the CROs in both China and India and other parts of the world. Our existing presence there enables us to help them grow faster as well. We are also seeing increased activity and growth in new and emerging biotech companies who generally do not have manufacturing capabilities and certainly benefit our SAFC business unit. There are opportunities in emerging markets in what I would call the second-tier countries after within the capital region that we will continue to exploit as well and expand our footprint to a greater level in these places.
I have another video for you as well. There's Bob Weiss. He's the president and CEO of the Cooper Companies. Their ticker is COO. Talks about the new products and expansions as well as their acquisitions.
New product details. We really have best in class now in all three areas. In the one-day modality, we have ProClear one day. We now have enough capacity to roll out a launch not only in the U.S. but in Europe and worldwide. We launched a little over a year ago, or almost a year ago in the U.S., Biofinity, and today have robust capacity that allows us to take that worldwide. And most recently, in April, we announced the launch of Avera. Avera is a 2-week silicone hydrogel lens. That's the sweet spot of the U.S. market, and it's one that will allow us to basically move forward with solid double-digit growth, we believe. Lastly, we've indicated that we expect to launch in the first half of fiscal year 2009. Our fiscal year begins November 1st. We expect to launch a silicone hydrogel toric. We are the world leader in torics for astigmatism, have about 1/3 of the world in that space, and it's important that we play in the market not only with hydrogels but also silicone hydrogels. I'll get a little into the color of the industry in a bit. Lastly, Cooper Surgical, by way of recent events, expanded into the hospital and the outpatient arena. We now have about 30% of our business in Cooper Surgical that is other than calling in the office of the gynecologist, also calling in on the in the hospital arena. And we've done a number of strategic acquisitions that tie in with that strategy in terms of minimal invasive surgery, and I'll talk to that briefly.
And we have one last video of David Henschel, the CFO of Citrix Systems, their ticker CTXS. He discusses the product's line's end-to-end application delivery infrastructure and discusses the new technology called Workflow Studio. Here it is.
Our products in this area break down into an end-to-end solution providing the infrastructure for a data center to the desktop message, allowing you to manage all of these components in unison across Zen Desktop, Zen App, NetScaler, and Zen Server. Those are our 4 major product lines. And I'm going to talk a little bit in a minute about how we go to market across the products, but we sell in total about 20 different products these days. These are the 4 strategic attributes along this differentiated message, and then the other component products are really in support. The magic about making these different markets really operate as a system or a solution is been around how do you orchestrate the pieces together. So at our user conference a couple of months ago, we introduced a new set of technologies. They're in beta right now. We'll be introducing them in product form in 2009. It's a set of technologies called Workflow Studio. And really what that does is automate the workflow requirements on the different parts of the system. So let me give you a quick example there. If you've got a number of different users all of a sudden coming online in one of your international locations, the system will automatically sense that you've got a high demand load coming in on the front end. So Workflow Studio would trigger Zen Server to spin up several new virtual servers, to provision workloads to those servers at the same time, and provision out new desktops loaded with apps from either the NetScaler or the Zen App product line, to be able to sense that demand coming, increase the capabilities, and when that demand has gone away, it'll actually dial the systems back, allowing you to manage your power needs, your cooling needs, etc., in the most efficient way possible. So that's the idea of how those products go forward.
I have one last note for you from Baird. We have Richard Gaynor, the CFO, and Vikram Saxena, the STO of Sonus Networks. Their ticker is SONS, S-O-N-S. Talked about how Sonus is growing at a 20 to 25% rate.
And super cool clean tech stuff, Marley.
Super cool stuff from Merriman Curhan.
CleanTech.
And if they want to hear all that stuff from Baird, you can go to wsw.com/webcast/RWBaird22. And here's my Merriman notes for you. We have Peng Lim. He's the CEO of Mechanical Technology. Their ticker is MKTY. Discuss the company's plan to replace lithium-ion batteries with their new Mobion energy technology, which will provide longer battery life with no need to recharge in products such as cell phones and digital cameras.
Yeah, they're a cool company. We've been working with them
Really
for a long time. And it's neat. We're getting flying cars, German. All right, not flying cars, but at least we're getting batteries. Cool batteries for hybrids.
Got some more battery chat for you. You want another battery note? I have Charles Gossenheimer. He's the chairman and CEO of Ener1. Their ticker is ENON. Discuss the company's focus on their lithium-ion battery built for use in hybrid and electric cars, which don't fly, and the companies such as GM, Ford, and Chrysler that have picked it up for its efficiency and safety.
German, can electric cars fly? No.
German says no.
No.
I have one more note for you. You want it?
He's cranky. I want the note.
I have David Eichinger. He's the CFO of Synthesis Energy Systems. Their ticker is SYMX. Describe the tremendous growth opportunity in China in terms of their rapidly growing demand for domestically produced energy and chemical feedstocks and the political commitment to clean coal technologies.
No batteries?
No batteries in that one. But if you want to listen to all of those,
what?
You can go to wsw.com/webcast/MCM9.
Boy, thank you, Marley.
I'm just full of information today, but that's all I have.
You are. You didn't sing for us, though, and no flying cars.
That's what I've been singing all day long.
And then everyone else gets to hear her sing than us? Jeremy, don't you want to hear Marley sing?
No, unfortunately, the show is presently at 11 and a half minutes, so it's a duty to everyone watching. I think we should end now.
I'm not going to sing.
Maybe on the next show.
Okay.
All right, well, that's all we have for today. We're here every day at Wall Street Media. You can find us at WSMCO.com. Thanks for joining us.